In today's episode, we're going to talk about what the Trump presidency and the Trump economy means for the stock market and for active traders like myself and perhaps you as well. My name is Ross Cameron. I'm a full-time trader. In fact, I funded my first account in 2001, so I've traded through a number of different presidencies, including Trump's first term in office. And there was no question that coming into 2024, I knew that we would experience volatility coming towards the election day. But this election was particularly interesting. Harris versus Trump. This is a huge election, unprecedented in many ways, with Biden dropping out, Harris taking the ticket, and then, of course, Trump making this recovery, which many people are saying is really an unprecedented recovery. So just unusual dynamics in a lot of ways. Trump becoming sort of this anti-establishment candidate, Harris trying to represent a new path forward and change, yet she's the incumbent as a vice president to president. So just really kind of very specific dynamics to this election, which made it feel so significant. Now, I knew that if Trump won and was a resounding winner, if there was going to be a week of counting and it was very, very close, too close to call, that would be a lot of turmoil and there'd be a lot of tension around that. But I knew that if he was a resounding winner, and that is the case, that we would see the market immediately squeeze up. And that's exactly what we've seen. In fact, it's bordering on euphoria. The Dow Jones Industrial Average, up 1,000 points. The IWM, which is the Russell 2000 index, that's up nearly 6% in one day. I mean, we haven't seen a day that big in the Russell 2000. I don't even know how far back we'd have to go to see a day like this. So it's really interesting because we're seeing money immediately moving now that we have the confirmation that Trump has made this recovery and is coming into office, coming in January. But let's talk for a moment about what a Harris economy and a Harris presidency would have meant. And we're talking purely through the lens of what it means for the stock market and really that narrow lens. I'm not talking about foreign policy. I'm not talking about social issues so much here, really just through the lens of the stock market, which is, of course, my area of expertise. So number one, higher tax environment. So ending the Trump era 2017 tax cuts. So the 2017 tax cuts, we knew that those were set to expire, and there was really no question that if Harris won, those would expire, and therefore taxes would go up. But there was also the very real possibility that capital gains taxes would go up. There's always been speculation of a transaction tax that Democrats have wanted to put on Wall Street. Now, a transaction tax would be a significant change because if there was a substantial tax on every individual transaction, active traders like myself would pay exorbitant fees. I mean, think about it. It would be really substantial. Now, there'd be a lot of resistance to that happening, but if there was a blue wave, if Harris had won and they had won, Democrats had won the Senate and the House, I don't want to say it couldn't have happened. That was a possible risk. And so one of the things that we've seen immediately, guess what sector has squeezed up? Financial institutions, big banks, investment banks, because a Trump presidency, well, it means the exact opposite. So we could essentially do it like this, where we've got Trump here, and then we've got Harris here. So Harris, higher taxes, right? Higher taxes, higher than what we are currently paying. And on the Trump side, lower taxes. And then number two is lower regulation. So less regulation, both on Wall Street, but also in general. Whereas Harris, higher regulatory environment. So this is something that, reining in Wall Street. I mean, we hear that all the time from Democratic nominees. They want to rein in Wall Street. They want to tax Wall Street, take the profits off of Wall Street, and use that for funding social services and other things like that. And I'm not trying to provide commentary on my opinion on these things. I'm just stating really the fact here of this would have been the difference. So a Harris presidency and a Harris economy, no doubt, would have been a higher tax environment for wealthy people, including traders, hedge fund traders, hedge fund managers, big investment bankers, but also a higher tax environment for these big domestic US companies and also the multinational companies that are listed on the exchanges. A higher tax environment, that means less profitability. So less profitability, lower earnings per share. So we're seeing a little bit of a reduction in share price going up over time if we really have a high tax environment. Now, some of those taxes get passed on to consumers, higher taxes for consumers. Again, that can reduce sales. So it just creates this headwind towards profitability. So higher tax environment, that's the first thing that would have happened in a Harris presidency, in a Harris economy, that in a Trump economy is the exact opposite. It's not just that taxes won't go higher, it's that they're pretty much guaranteed that they will stay the same and go lower. All right, so that's going to be a big deal for a lot of these big companies, and no doubt for a lot of wealthy Americans, but also to a varying extent, maybe middle-class Americans as well. Now, the regulatory component is interesting. The reining in of Wall Street. So a higher regulatory environment is going to cost more money to the big national, multinational companies, and even the big domestic companies, and certainly the investment banks. Higher regulatory environment, that's going to be more money going to regulatory fines, regulatory compliance, all these different things. Just a heightened regulatory environment is going to be more difficult for a lot of companies to thrive in. That's just the reality. So now, as we look at a Trump presidency and a Trump economy, we're seeing lower taxes and a lower regulatory environment. So the stocks that would have suffered in a Harris presidency, most likely, and if we're just being kind of realistic about the types of stocks, stocks that would have gone down would have been financial stocks, fintech stocks, financial investment banks, things like that. And then companies that are high tax. Now, interestingly, in a Trump presidency, possible stocks that could go down could be tech companies. If you recall, Trump is not a big fan of a lot of these big tech companies. Google, owner of YouTube, Meta, Facebook, right? So, Twitter, well, that's an exception, but of course it's not a publicly traded company anymore. So now some of those big tech companies are not companies that have high levels of tax. Apple sells goods, so their tax is a little bit different, the inventory and everything else. But Meta, Google, they're very large companies. They do pay tax, but a lot of tech companies generally have lower tax, especially some of these multinational companies that are able to have international branches, and they have international office where they funnel all of the international revenue, so they keep it offshore. It doesn't touch the U.S. Whereas companies that are very domestic in the U.S. can't really get around the U.S. taxes. And so anyways, there's a little bit of a divergence there when it comes to Trump. So tech companies, even though some of them are lower tax, they may suffer a little bit more in a Trump presidency if he's not particularly friendly to those tech companies. But no doubt, companies that are probably going to do quite well will be banks, and domestic companies. So, and then who's also going down? Chinese companies. So if you recall, as small cap traders, we often trade Chinese companies. But one of the things that we clearly recognize is that many of these Chinese companies have been used as vehicles for pump and dumps. There's a lot of manipulation. There's a lot of scams that go on with these Chinese companies. So it's possible that we will see Trump do something about that. Now, I'm not sure, because of that sort of, hands off from a regulatory standpoint. I don't know. The Securities and Exchange Commission certainly could do something about these Chinese companies, and maybe they will. It would be great if they did, because they really end up just taking money right out of the pockets of U.S. investors who lose it to these companies in these scams. But I'm not sure what'll happen there. But what we do know is that if we look at the Russell 2000, so the Russell 2000, I'm going to put it up on my chart right here. This is the small cap index of 2,000 U.S. small cap companies, and it's having its best day right here that it's had in a very long time, up nearly 6%. And why is that? Because Trump's policies around higher tariffs, higher taxes, and putting U.S. companies first is going to be especially good for these small companies. This is going to be really good. Now, what would also be really good is if we go into a period of lower interest rates. Now, this is going to be what happens with inflation is certainly subject to a number of different opinions. one of the things that was really challenging during the Biden administration was, and it of course began during the end of the Trump administration, was the increase in inflation. But you have to remember that a lot of this is the result of monetary policy from the Federal Reserve. And the Federal Reserve, as they'll often say, is not a political party. They're not governed by the sitting president. They're going to do what they think is best for monetary policy and stability of the dollar. And yet, what we know was that the Federal Reserve was behind the ball in saying that inflation was transitory. And then as it turned out, it really wasn't. And there's definitely a certain extent of price gouging that occurred. And we all of a sudden have seen a lot of these companies putting out record profits, which has resulted in a lot of growth in the stock market. And all that excess money that's been created went into people buying houses and second houses and investment houses. So the housing market has gone crazy. And then the Federal Reserve came in and said, let's jack up interest rates at an unprecedented rate. And then what happened? Well, Silicon Valley Bank collapsed. We had one bank collapse. We had a couple others that were sort of on the verge. First Republic, a few others that didn't do well in that environment. But for the most part, the economy has managed to not collapse in spite of these very high interest rates. But there is a lot of debt on the books for many big investment banks that are holding mortgages of commercial properties that now, because of these interest rates, the ROI just isn't there servicing the debt, especially on commercial properties where they used variable interest rates and short duration. Now they have to refinance at higher rates. This will continue to cause problems. So I will say last year was my worst performance, my worst year of trading since 2016. And that was sort of the tail end of the Biden administration. Now, this 2024, the past year, 2024, has been a much better year for me. And I think that's been a combination of factors. Some of it has been the performance of the overall market, and some of it has been perhaps optimism about a change in administration coming soon. So the IWM right now, if you look at it, let's just go back. We are now coming up to a level that is tied more or less with 2021. So this is, and look, this move is not, this is not because of the current presidency. This is because of who's coming into office. That's why we're back up at these levels. So the IWM is moving up. As a small cap trader, this is really good to see because this is going to be the rising tide that lifts all ships. An environment that's favorable for small cap companies is going to be good for small cap traders. No question about it. Now, it would be better if interest rates come down a bit more because higher interest rates mean that these small cap companies are less inclined to take debt to finance operations and more inclined to sell shares, which is why we've seen a lot more direct registered secondary offerings in the past couple of years versus these companies taking on debt to grow their business. It's just cheaper for them to sell shares. It's just more economical. So the IWM certainly moving quite a lot higher. A lot of investment banks also moving quite a bit higher today. And let's look at another stock that's moving quite a bit today, Tesla. Tesla currently up, gosh, it must be 12, 15%. An incredible day for Tesla. So the reason, of course, Tesla is moving up so much is because, well, Elon Musk had put in nearly $130 million into the Trump campaign. He was, of course, in Pennsylvania over the last several weeks as the campaign was, it's finishing, the final rally before the election day. And so, as you may know, and you probably do, but Trump was, of course, so impressed with Elon Musk landing that rocket and catching it that, they've, I'm sure, had some degree of relationship, but it's really blossomed. And now Elon Musk is poised to have a real role in this new administration. He is, I think, self-appointing him title of Department of Government Efficiency, DOGE, which is quite interesting. I saw him post a picture of him carrying the sink out of Twitter. So if you recall, when he bought Twitter, he cleaned house. Now, doing that at the scale of the government, there's no question that would cause some ramifications. But he said, Elon Musk said he thinks he can cut 2 trillion off the national budget, which is a huge amount of money to cut. But he, one thing that we know about Elon Musk is he's been very successful in business. He is the wealthiest man in the world. He's very successful in business. Tesla's incredibly successful. Twitter, I don't know that you could say Twitter is a successful company, but it's obviously a platform that he owns and that he bought, and he had very strong reasons for buying it. SpaceX doing very well. And so the reason Tesla is going up so much is because Elon Musk being in, a close relationship with the government can only benefit Tesla, right? Lower regulatory environment, lower regulatory hurdles, the things that perhaps government contracts with SpaceX. Elon Musk has been very vocal about criticizing Boeing and the relationship that they've had with the government. So, there's any number of things that could happen, but it's pretty well known that Elon Musk and the Biden administration were at odds. And Elon Musk was not invited to the White House, and the White House was congratulating Ford and these other companies for all the work they've done on electric vehicles, but sort of snubbing Elon Musk. So I think it's pretty clear that he was not well liked by Democrats at that time for a number of reasons, and he is seemingly well liked by Trump. So the role that he may have certainly could benefit Tesla, and we'll see what else happens. So shares of Tesla moving higher. Now we'll look at Goldman Sachs for a second. So shares of Goldman Sachs here, let's see, up, what percentage are we? 13% on Goldman Sachs. So Goldman Sachs up 13% today, Tesla up 14% today. DJT, Trump Media, up 6%, a little more modest there. DJT paring back some of the earlier gains. I think a problem with DJT is still the reality of the business model. I mean, just objectively, you have businesses out there like Goldman Sachs that make money and will make more money in a lower regulatory, lower tax environment. And then you have something like Trump Media, which, is probably from most perspectives overvalued. And, so anyways, I think this is much more speculative. Some people thought, the knee-jerk reaction was if Trump wins, buy DJT. And that was the spike that we saw right at 4 a.m., which was pretty much, is the earliest you could begin trading on the public market, DJT. And it opened, gapped up higher, and immediately squeezed to $55. But then dropped all the way back down to 42, bounced back up, pulled back, and is a pretty volatile name, halting down a couple times at the open. So it's still up 6% today, which isn't nothing. But I don't think that's going to be our highlight stock. But what are some other markets that are suffering here? Well, let's not forget about renewable energy. So renewable energy, oops, it's fine. So renewable energy is down. All right, Trump is a big fan of oil. So let's look at FSLR, First Solar. First Solar down today. What's the percentage? FSLR, currently down 11%. So we're seeing solar stocks declining today. We're also seeing cannabis stocks declining today. Cannabis, the path to legalization, perhaps not looking so favorable under a Trump administration. Although, from a business perspective, taxation from the sales could really benefit. But anyways, for the time being, I mean, we'll see what happens. Wasn't it Elon Musk that was smoking on Joe Rogan podcast? I want to say he was, but I don't know. So anyways, so First Solar down. And then we have, of course, Chinese companies, Alibaba, this one's down a bit. There's some Chinese ETFs. I can't remember the ticker for them. Let's see. But anyways, I know a number of the Chinese ETFs are down as well. So this is because, again, higher tax environment. I did make a note during my recap today that The Economist put out their opinion that they were in favor of Harris. And they said she's not the best person for the job, but Trump is worse. And their concern was the wild card of what some of the high tariffs could mean for the economy. And, if we get into a tariff war and things like that, trade wars. So, I mean, there's no question that that's a concern. But I think that, that obviously the U.S. voters disagreed with the economist, and Trump is going to be the president. So we'll just have to see what ends up happening with that. Unfortunately, there's a lot of rhetoric, and there's not a very clear path of exactly, or plan of exactly, what tax rates are going to be, what the tariffs are going to be, how they're going to, what this all exactly looks like. We're going to know a lot more in the coming weeks and months, no doubt. But I think from pure lens, narrow view of stock market performance, an interesting, and I'll just say this, that a Harris win would have resulted most likely in the market dropping pretty much immediately. But what's also true is that historically, the markets have returned a higher percentage when a Democrat has been the president. And that to me is very interesting. Interesting contradiction from what people feel and the knee-jerk reaction we're seeing in the market right now to what history tells us about Democrats when they're the president. So, again, you could say, well, Trump's not your typical Republican. The Republican Party has changed, and Trump has sort of brought in that change. And the Democratic Party has changed as well. So I don't know. But in any case, I think that for small cap traders, a Trump presidency ultimately, through this narrow view, is going to be more favorable than a Harris presidency. And again, this is setting aside, any opinions you have about the social elements of their campaign and their presidencies, or foreign policy, immigration, things like that. But in the polls, the number one reason people were voting for Trump was the economy. That was the number one reason. This high inflation environment that has kind of defined the presidency of Joe Biden, that Harris couldn't really separate herself from, because of course she's been the VP, is something that people want an end to. And so economy was, I think, first on the list for voters for Trump. And I think I can't remember what was first on the list for the voters of Harris. It might have been, I can't remember if it was the social policies, or if it was, maintaining integrity of democracy or something like that. But in any case, at the end of the day, it's the economy that I think a lot of people are thinking about, and which president is going to potentially help put more money in my pocket. So it's a very interesting time. There's no question about it. The knee-jerk reaction from the market is renewables, renewable energy stocks, and Chinese stocks dropping, and then of course some of these just unbelievably big bank stocks really thriving. And of course, we also have some of these biotech stocks that are dropping a bit. Well, Pfizer pharmaceutical stocks. So there's volatility there as well with RFK and, kind of what's going to happen. So it's going to be very interesting. But I think that for most active traders, as long as we see the IWM continue to rally, as long as we see the lending become more favorable for small cap companies, and we see inflation continue to decline, I think it's going to be a favorable environment for active trading. And certainly the lower tax environment and the lower regulatory environment will help those companies as well, and will trickle down to helping active traders. So that's my current take on it. There's no question that we're going to have traders in the market that are U.S. traders. We're going to have a lot of international traders. A lot of people are going to come trade the U.S. market. The U.S. market is one of the most volatile markets in the world. It has the most volume, so it's a liquid market. There's incredible amounts of opportunity, and I think we'll see a lot of international traders trading the U.S. market, which currently happens, but can happen, will continue to happen. And I think that I'm hopeful that we're going to see some really good opportunities. So right now, I'm in the middle of a hot streak that has been really quite impressive. The last let's see, look at the last 90 days here, 90-day outlook. So do overview, and then these are my metrics for the last 90 days. So last 90 days here, sitting at $939,000 in profit, day trading, just actively trading the market each day. And that doesn't include today's profit, which was $35,267. So coming up at over 950,000 in the last 90 days. Maybe by the end of the week or early next week, it'll be over 1 million in a 90-day window, which is really quite impressive. A few back-to-back 90-day windows like that, and all of a sudden, this looks like 2020, 2021 all over again. 2020, for what it's worth, Joe Biden came into office in January of 2021. And so the election in the fall of 2020, that was during a time when, people weren't happy with how Trump handled the pandemic, the lockdowns and the vaccines and everything else, and the economic impact that had. It was real and it was not good. I don't know if anyone would have managed it a lot better, but it was not a good situation. And in any case, 2020, however, was the best year that I ever had trading. 2021 was good, but not as good. And then 2022 was slower, and 2023 was the worst year I'd had since 2016. And now this year is certainly bouncing back, and nearly $1 million in the last 90 days. If I was able to maintain that for a year, that comes back to $4 or $5 million years. So that's back to where I was in 2020. And I don't think that that's unrealistic if we keep seeing the level of volatility that we've had. Just for example, today, right now, we have a stock up over 500%, 490, 500%, 506% right now, with 900 million shares of volume. Wow, unbelievable. From a low of 20 cents to over $1 a share. I mean, I think we're just going to keep seeing a lot of opportunities. Now, of course, I could be wrong, and I may be. If things slow down, then I'll be grateful for the hot streak that I've had, and I won't overstay my welcome. I'll just, pare down my risk a little bit. I show up every day, whether it's a bear market, a bull market, a Democrat in office, or a Republican in office. I show up every day. But right now, although I'm concerned about some of the, there's a number of things about Trump that could cause some concern, but in total, from the narrow lens of market performance, I think that based just on that standard, we should be in pretty good shape. So in any case, it's always, I'm an eternal optimist. So I think any trader has to be. You have to be optimistic if you're trading in the market. The odds are stacked against you. It's a very difficult job. So I try to be optimistic. If Harris had won, I would be optimistic and make the most of it, and try to have a good run through it. But I think comparing the two, just on the state of market performance, I think at least for the next 6, 12, 18 months, 24 months, we're probably in better shape with Trump. And what happens, in his third and fourth, years in his term, that'll be when we'll really know whether or not his economic policies have really had lasting positive effect, or if they're backfiring. And of course, it's possible a trade war or something like that could backfire as early as next year if that did happen, and that could be some pain that we have to go through. But we've gone through pain before. We went through it with the Federal Reserve increasing interest rates, and if we go through it with something else, then we'll go through it there too. I'm sure we'll get through it. So anyways, that's it for me. I appreciate you guys tuning in for this episode. If you found it interesting, I hope you hit the thumbs up. And I'll remind you, as always, that trading is risky. My results aren't typical, so manage your risk, take it slow, and always practice in a simulator before trading with real money. Thanks again for tuning in. And if you want to check out a 2-week trial at Warrior Trading, I'll put a link in the description where you can join us and see what it's like to be part of this trading community. All right, I'll see you guys back at it for the next episode real soon.